This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Bloomberg Businessweek Daily. Carol Massar and Lisa Mateo, lucky for us, in the house. She does weekend duty here.
Yes.
And you're also doing daily duty.
Doing daily duty. It's a good one.
She covers it all. She's, of course, in for Tim, who is out this week. And we've got a lot going on. Once again, we are looking at a market where we are seeing a risk-on trade, in particular in the tech trade. Lisa, we've got the NASDAQ 100 higher by more than 500 points.
Yeah, it looks like the markets are kind of feeling the economy can absorb everything going on with all the headlines, all the geopolitical tensions. So far, so good.
Yeah, we continue to kind of have days where we look through what's going on in the Middle East, and then there are days that it is front and center. Semiconductors really leading the way today. We're going to be talking about that a bit over the next few hours. The SOX up 4.5%. We're going to get more on the trade for you in just a moment. First up, though, we are going to talk about U.S. and Iran, the trading of air strikes back and forth, tit for tat, that we are seeing between the two. Is it a conflict? Is it a denuclearization? Is it the end of a ceasefire? Is it perhaps just tough peace talks? We don't know. We hear all different things to describe it. So we're going to try and find out some answers about where we are in that situation. Plus, we mentioned Zuck getting aggressive with Meta's pay-to-use AI. What I love about this, Lisa, is that all of a sudden it seems like Meta platform's leaning much more aggressively into that trade that has excited so many investors, and that is hyperscalers.
Yeah, and it'll be interesting to see who will follow along kind of in the same suit.
Yeah, exactly. So we're going to dig into that. You highlighted on our planning call this morning, we got to talk some politics.
Of course. Yes, most definitely. Everything going on, of course, the infighting amongst Democrats, that's the big story there. And what, Republicans, do they have to kind of change their strategy and everything?
And midterms are just around the corner.
Just around the corner.
We're going to talk about that. And then we've got a great market guest to tie it all together. Sit tight, everybody. Lisa and I have a lot for you in the next 60 minutes. Let's get you going, though, with a check on the trade. Here's Charlie Pellet.
Hi, thank you very much indeed. Looking at two major themes for markets today. You guys alluded to both, chips and oil. And right now we have got stocks pushing higher. You run the GIP screen on the Bloomberg, looking at the S&P 500 index, just about the best level of the day. But let's begin with what is going on with chips. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index. It is up by 4.5%, as Carol mentioned. Right now, the NASDAQ 100 index surging 1.7%. NASDAQ Composite Index up 1.2%. And should point out that on the NASDAQ 100 index, now looking at a gain of 504 points. S&P up 61. That is a gain of just about 0.8%, with the industrials, Dow Industrials up 187 now, up by about 0.4%. The Bloomberg Mag 7 index up 0.3%. Again, the SOX up 4.4%. All of this with the VIX right around 16. The 10-year 4.53%. The 2-year 4.15%. Gold is at $41.33 the ounce, up 1.4%. West Texas Intermediate crude down 2.8%, $71.48 a barrel. And Bitcoin now at 63,140. Bitcoin up by 1.7%. Chip names, shares of Broadcom, they're surging 4.4%. Micron up now by 7.7%. Intel up by 2.1%. Nvidia, though, in the red. Nvidia down by just about 0.4%. Recapping stocks higher, chip stocks are rallying. S&P 500 index up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Lisa, that is a Bloomberg Business Flash.
All right, great stuff. Charlie, thank you so much. And as we said, we're going to be talking about the chip sector a little bit later on Bloomberg Businessweek Daily. By the way, the SOX still up about 85% year to date. All right, folks, let's get to it. As we mentioned at the top of the hour, the U.S. military attacked Iran for a second day. Tehran retaliated against American allies in the Persian Gulf. And so that has raised fears once again of a return to war after little progress seems to be making in those efforts to secure a diplomatic outcome. Peace talks, as we know, can be difficult. President Trump addressed the latest on the relationship. He did so aboard Air Force One yesterday as he returned from the NATO summit in Turkey.
We have many ways we can win, but we've already won militarily. They have very little They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
All right, that, of course, was President Trump talking about Iran. That was aboard Air Force One yesterday, returning from the NATO summit. As the two continue their tit for tat, Lisa, we said this at the beginning. Yeah. Sometimes it's called a conflict. Sometimes the president says, no, it's a denuclearization of Iran. They talk about the end of a ceasefire, an escalation, war. Like, it just goes back and forth. Yeah. Right? And so what exactly is going on? And that is something we're hoping to tackle here as we continue to follow it. Edward Fishman is back with us. He is Senior Fellow and Director of the Maurice R. Greenberg Center for Geoeconomics at the Council on Foreign Relations. He's also author of the New York Times bestseller, Choke Points, American Power in the Age of Economic Warfare. He's a perfect voice for us. Ed, thank you so much for coming back on here. As I keep saying, and Anna, one of our producers, saying, wait, what is this? Like when we were talking about in our planning call. Conflict, denuclearization, a war, tough peace talks. Hard to know where we really are in this situation. And we have days where the markets look through it and some days they don't. Where are we, in your view, when it comes to the U.S. war with Iran?
So look, I think that there's a fundamental, irreconcilable difference between the United States and Iran, and that is, what is the status of the Strait of Hormuz moving forward? This war, when the United States and Israel started it in February, was clearly aimed at regime change. When it became apparent that that was not going to happen, the United States sort of pared back its intentions to try to get denuclearization. But I think it became apparent that Iran's closure of the Strait of Hormuz was imposing so much pressure on the global economy and on the U.S. economy in particular, that it has really become a conflict over that issue. And even the memorandum of understanding, the deal that was signed last month, it left some serious ambiguities over the future status of the Strait of Hormuz. And I think that's what's bubbling to the surface right now. The U.S. and Iran really fighting over what the status of the Strait will be moving forward.
Well, Edward, I want to stick on the Strait. Could, all the influence that Iran has on that waterway, could it kind of change the power dynamic in the Middle East permanently?
Oh, certainly. And I think that's what Iran sees and why Iran believes it's so important for it to retain control over the Strait of Hormuz moving forward. Because for Iran, the Strait of Hormuz offers really two major benefits. First of all, it's a deterrent, that any time the United States or Israel or any other country threatens Iran militarily, Iran can say, well, guess what? We are closing the world's most important energy choke point, and we can inflict significant harm on you. That's obviously what we've seen over the last few months. But I think there's another benefit for Iran, and that's just in terms of revenue. The Iranian government officials have said that they see the Strait of Hormuz as about a $40 billion annuity, just from charging service fees, insurance fees, other fees for ships going through the Strait. That's a huge amount of money for Iran. That would basically double the amount of money that they earn selling oil, which is their one major export. So I think it's going to be very challenging to get Iran to give up that control. But of course, the only way to get Iran to give up that control would require the U.S. to escalate militarily. And that doesn't seem like something President Trump really wants to do.
Why not go back to where we were? Give Iran the Strait. I mean, it seemed to work pretty well. And if we can get the denuclearization, which I thought was really the main goal here, and maybe a regime change, but that is obviously tricky, why not? Doesn't the U.S. say, okay?
Yeah, I think there's a few reasons, but I think first of all, free and open navigation of waterways is a linchpin of the international system that the United States has really buttressed since the end of World War II. And Donald Trump on multiple occasions has said that there will be no charges in the Strait of Hormuz. Marco Rubio has been even more explicit, saying that if Iran were to set up a toll at Hormuz, that would cause chaos. But the thing that's unusual, though, Carol, is if you see those really strong statements made by President Trump and Secretary of State Rubio, they really cut across the grain of what the U.S. agreed to in the MOU. Because the MOU very clearly, it says that Iran won't charge tolls, but only for 60 days. So it leaves the future of the Strait beyond 60 days not defined. And then also the MOU said that Iran will determine the future status of the Strait alongside Oman. Gave Iran this role.
Help me understand something. I've been to the Panama Canal. I've watched big boats going through. They charge a lot. So what's the difference? What am I missing?
Yeah. So the Panama Canal, the Suez Canal, they are both man-made canals that require, engineering, officials to operate them. And so they have long charged fees. And for both the Egyptian government and the Panamanian government, they make billions of dollars a year operating those canals. I think probably the best analogy here for the Iranians would be either the Bosphorus, which is a strait, naturally occurring strait. Maybe the slight difference there is that Turkey controls both sides of the Bosphorus, whereas Iran is only one side of the Strait of Hormuz, or the Strait of Malacca. And in the case of the Bosphorus, there's an international treaty, the Treaty of Montreux, that does give Turkey the ability to regulate that waterway. They do make money off of it. So according to international law, the Strait of Hormuz is a naturally occurring strait. Iran should not be charging tolls there. But if they are providing value-added services, environmental cleanup, et cetera, they do have some claim to potentially charge fees. I think the challenge is what Iran is doing right now is not that at all, right? What they're saying is that if you try to sail through Omani waters, we are going to strike you with a drone or a missile. I mean, that is effectively a gangster style move that is really challenging for the United States to tolerate.
Hey, Edward, 20 seconds. So conflict, denuclearization, war, what's the word real quickly? How do we call this at this point?
I think this is a war. I mean, it's a low simmering war that doesn't have a clean ending and may not. I think it may be the type of thing where you have fighting that bubbles up and down over several years, where countries like Saudi Arabia, Qatar, and UAE cut their own side deals with Iran.
Man, kept keeping us busy, that's for sure, and not over yet. Edward Fishman, always appreciate your perspective. Senior Fellow, Director of the Maurice R. Greenberg Center for Geoeconomics over at the Council on Foreign Relations. Also check out his book, bestseller at the New York Times Choke Points. All right, good to have him here. We're going to continue to watch the developments in the Middle East, but we know market watchers continue to watch it too, Lisa.
Yes, most definitely. And we're also watching oil too on top of that. So we want to bring in Aaron Mulvihill. He's a global alternative strategist, JPMorgan Asset Management. Aaron, so I have to turn after just our conversation that we had. I'm looking at Brent crude. It's at $75 a barrel. WTI crude, $71 a barrel. They're down about 2.5%. I mean, what does that tell you after the conversation that we just had?
Yeah, I mean, we just had a great geography lesson there from Edward. If I take us to another part of the world that's actually quite interesting in terms of the impact on oil is Russia right now.
Of course.
You've got the Iran conflict, but also the Russia-Ukraine conflict is one of the factors that's impacting the price. So we've seen, we get questions, why is oil not even higher than it is right now? And one of the factors is Russia has got a plentiful supply of crude oil, but it's not able to refine all of that crude oil right now because Ukraine has made such an impact on the refining capacity of Russia that now there's 1.5 million extra barrels in play on global markets out there that Russia is actually exporting.
But it's not being refined, which is why we're not necessarily seeing it reflected at the pump, correct?
Exactly, and we might see diesel prices continue to remain higher even as oil prices come down.
I'm so glad you brought it together because I don't think we can talk about one war without thinking about the other because they're, between the alliances and relationships and so on and so forth, and then the impact on the global economy. Do you look, though, through the U.S. war with Iran at this point? Because there are days where the market certainly does, and then there are days that the market does not.
I think we have to. There's other dynamics at play that are just that much more important long-term than any conflict can be. And AI is just the most transformational of all of the impacts right now. So I think that a lot of investors are looking through. Over the last couple of months, you certainly had a negative impact from the war and the geopolitical issues, but there's so much positivity and enthusiasm around AI right now in public
fundamentally
markets,
backed?
in private markets. Backed by fundamentals, a lot of cash flow generation, certainly. Some of it is more future looking. Certainly in the venture space, a lot of enthusiasm right now around not just the foundational models, but how are companies and applications going to use these models and apply them to actually generate real cash flow for businesses, for consumers. So, and we're starting to see this kind of convergence of the public and the private markets now with more IPOs coming to the markets recently and a lot of IPOs in the hopper as we see.
And there's a lot of enthusiasm around the AI trade too. But is there I don't want to say a less expensive alternative, but what else is there aside from the AI trade?
That's a question, Lisa, we're getting a lot from clients right now where they're excited about AI, that they want to be unexposed to AI, but what else is out there that's a little bit different? And so we're pointing them towards, at least in the private markets areas like real estate, that have positive dynamics, but they're not AI-linked dynamics. There's part of it is AI, but you're seeing in San Francisco, New York, property prices going up because AI companies want their folks in the office, and they're renting out office space. But that applies also more broadly to the markets. We're seeing the real estate market now recover from a bottom. And if you look around, everything looks expensive, but real estate actually today looks pretty cheap on a historical basis.
One of the things I wanted to ask you about, and something we're going to kind of dig thematically over the next couple of hours, is that you look at the Mag 7, and it is definitely lagging in a big way. If I look at the index overall, let me just pull up the Bloomberg Mag 7 index. You're looking at it up about 1% year to date. If I look at the S&P 500, it's up 10%. The equal weight is up about 12% here. The Mag 7, NVIDIA, Alphabet, Amazon, they've gone nowhere. They are trailing 300 stocks in the S&P 500. Something like a Dollar Tree or a Hubble Inc. are outperforming. Is that significant in your view?
It's a very important trend. That we've been looking at this for a couple of years now. So
yeah.
If you go back to 2023, every one of the Mag 7 beat the S&P 500. The next year, I think 3 of the Mag 7. Last year, very mixed bag, and this year to date, again, a very mixed bag with some of them beating, some not. So we're seeing this trend broaden where it's not just the Mag 7 now, but the semiconductor companies, the memory companies, all these companies that are in the chain, as well as in the private market space, companies that are supplying the power, the infrastructure, they're being the beneficiaries right now of the AI trade. And it's sort of a cash flow conversion. We're seeing the Mag 7 spend massive amounts of cash. And the beneficiaries of this right now are those that are kind of the supply chain components of AI.
So can I just follow, just real quick, so do you think that's significant, it's going to continue? Or do you think it's an opportunity in terms of that they're, underperforming?
It's a fantastic opportunity for stock pickers. And so we think this is a good opportunity just for active management in general. So if you're sort of a passive investor, you're along for the ride. If you're an active investor, you can put the research in and understand which of the Mag 7 are likely to outperform, which of their beneficiaries and customers are likely to outperform. We're at a historical high right now in terms of stock dispersion. So there's enormous opportunities for stock pickers.
Well, you mentioned opportunities. Do you see any signs of volatility under the hood too?
Certainly massive amounts of volatility. So it will not go without volatility. There's mechanisms to avoid some of the volatility, and that's where we would point towards something that's less correlated to AI, either in the public space or then in the private space. Real estate, as I mentioned, infrastructure is another play.
Why is the VIX below 16? I don't know. Maybe
there's
not everybody loves that index.
Where you've got
but
overall stock volatility is low, but intra-stock volatility is higher because you have now this sort of dispersion of companies that are likely to outperform. If you look at software, not doing so great, although we're starting to see a recovery in some software companies. So again, stock pickers are having a field day right now and trying to identify which are going to be the winners and the losers. A lot of volatility, but also a lot of opportunity to outperform for active investors.
Are you guys super busy when it comes to the IPO season? I was talking to one of our deals guys, and he says, I am nonstop. But he also said, not everything is actually great. That is being trying to get through either regulatory or just come to market because they're thinking about what happens in the midterms. Just got about 30 seconds.
It's been a historically high IPO season. Q1 was higher than, I think, any year since 2021. But a lot of companies will probably not IPO. And so it's important also for investors to be exposed to venture and private markets.
Good stuff. Thank you so much. Tying it all up for us. Aaron Mulvihill, he is Global Alternative Strategist over at JPMorgan Asset Management, joining us in studio. Hey, coming up, we talked about semiconductors. We touched on tech. Semis are rallying big time again. We've got Meta unveiling its paid AI developer model for the first time. Not sure I know what that means, but Kurt Wagner is going to be along to explain it all. Tech Talk is coming up next. Do not go anywhere.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Gains for the U.S. stock market with the S&P 500 index very close to session highs right now, looking at a gain of just about 60 points on the S&P, up by about 0.8%. S&P, by the way, currently at 75.42. Dow Industrials up 0.3%, up 174 points. NASDAQ is up 1.2%. The NASDAQ 100 index, full of those big tech names, they are up right now by 1.7% against the backdrop of the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by about 4.2%. The VIX right around 16. 10-year at 4.53% with a 2-year currently yielding 4.16%. Gold is up 1.2%. Spot gold, $41.26 the ounce. West Texas Intermediate crude, 72 even a barrel on WTI, down 2.1%. Barrel of Brent, 76.22. It is down now by 2.3%. Meta Platforms has unveiled a version of its most advanced AI model, Muse Spark 1.1. It includes a new paid tier for developers. We've got details coming up with our Kurt Wagner. Again, recapping, S&P 500 index up 60 now, up by about 0.8%. The stocks up by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Lisa and Carol, that is a Bloomberg Business Flash.
All right, so appreciate it. Thank you so much, Charlie Pellet there. Carol Master along with Lisa Mateo in for Tim Stenovic. And I feel like every day, you know this at Bloomberg, you guys cover it on the weekend. I mean, there's just so much in terms of the tech community that drops, and we're going to get into some of it. We've got Meta and a most read story on the Bloomberg about Meta. In fact, a new headline just crossed from our Kurt Wagner about Meta platforms and Mark Zuckerberg saying that they need all the computing power that they can get, and they're exploring an AI cloud business and how it makes sense. So we're going to dig into that in just a moment. We also want to talk about semiconductors because Micron planning to spend and increase its spending on new plants in the U.S. to $250 billion to help meet unprecedented demand for its memory chips. And we know, Lisa, it's all about the AI boom.
It is, definitely. That's all everybody's talking about. And that's a big number, 250 billion. So we're going to find out how that actually breaks down.
Yeah. And Maggie Eastland, she's up in Syracuse, and she's been tracking Micron today, I believe, at an event by Micron. She's Bloomberg News tech reporter. Maggie, good to have you here with us. Chip sector, it goes up and down and has a lot as of late. Tell us about Micron, where you were, what you saw today.
Absolutely. So I was outside of Syracuse, New York today. There was a ceremonial concrete pouring. Micron is starting to build here in upstate New York. The announcement today, should note, is an increase of 50 billion. So they already had committed to 200 billion in U.S. investments. So they upped that today. It is also over a pretty long timeline through 2035. So it's interesting to see the shares up quite a bit, given that it's such a long timeline. As we know, memory is a cyclical industry, or at least historically has been. The question going forward is whether AI will be enough to break out of that cycle. And it's super interesting to see that investors are still bullish on supply coming as late as 2035.
Now, Maggie, we've been hearing so much about tech layoffs, but this apparently going to create 90,000 jobs. Is that correct?
Yeah, that's what the chief executive officer, Sanjay Mehrotra, said today to an audience outside of Clay. So a lot of jobs being created here. Obviously, that's something that could help curry some favor with the Trump administration. Secretary Howard Lutnick was also out here in New York, praising this new investment.
What's telling to you, Maggie, you cover this sector. We talk about chips, it feels like every day. If you talk to Ian King, he's going to remind us this is all cyclical and there's increased demand, then everybody does a big build, and then there's oversupply, and then everything collapses. And memory in particular, as he reminds us, go back a few years and they just were so out of favor. What stands out for you as you see what Micron is doing and just kind of watching the trends?
Yeah, one piece of news that we haven't talked about is that this boom is creating a lot of political problems as well. So there's a long-term problem of, is this just another cycle?
Yeah.
And will we see another downturn? But there's also like short-term political problems. Apple right now is lobbying the Trump administration to essentially be able to use Chinese memory chips, which wouldn't be ideal for Micron or any of its competitors to have more competitors in the mix, essentially able to supply Apple, which is one of their top customers. There could also be, there was a letter from Semi a few weeks ago just warning the administration, hey, please don't do anything that would distort the market dynamics here. So there's also due to the shortage, there's a lot of short-term political pressure. And I think we can ask the question based on this announcement, whether Micron is aware of that, and they're sort of trying to announce things that the Trump administration will see as favorable right now and increase its investments to, gain more favor with those officials.
Right. And then on top of this, of course, we have the listing tomorrow of SK Hynix, Geoeconomics listing its shares, a U.S. listing. And so, again, they are the world's second largest memory chip maker. So there's a lot going on in the space, and all of a sudden it does feel like a ramp up of money, spend, investor awareness. Maggie, thanks. Maggie Eastland, Bloomberg News tech reporter out there in Syracuse, New York. Hey, we want to stay with tech and get to a couple of stories by our own Kurt Wagner. He is catching up, or caught up, I should say, with Mark Zuckerberg earlier for a lengthy interview and a few reveals. He is, of course, Bloomberg News senior technology reporter, Kurt Wagner. He's out there in Denver. Hey, Kurt, a second story just dropped of yours on the Bloomberg. Talk to us about your conversation with Zuck and like how it came to be, the timing of it all, and what he wanted to talk about and what you wanted to talk about.
Yeah, those aren't always the same.
No.
I think in this case, it ended up working out. But, the news that he wanted to talk about was this new model that was announced a few hours ago, Muse Spark 1.1. The model is, I think there's two things that are unique about it. One is sort of it's improved with agentic capabilities and coding capabilities for Meta. That's a big deal. They've sort of always lagged behind the OpenAI, Anthropic, Googles of the world. In this case, Mark Zuckerberg was very excited to tell me that they've actually surpassed Google's Gemini in most of the benchmarks that they were measuring against. And so this sort of felt like a leap for them in terms of model quality. So I think that's one. The second big thing, of course, from a business standpoint, is that they're going to sell the model to developers via an API. So Meta will host the model on its own, data centers or infrastructure. But if you're building on top of it, if you're using it as a business, you would pay Meta a fee to access it, which is a business that we've seen from Anthropic and OpenAI and others. So Meta's kind of catching up on that front. And, he was excited to talk about that. And that took up a good portion of our conversation. But as you mentioned, we had another story just drop, which I'm happy to talk about related to their cloud aspirations, which was something I was eager to talk to him about.
Well, go there, because I find it interesting because they really, weren't like all the other hyperscalers, right? I mean, and now it sounds like they're leaning in big. Is this because they want to be like Amazon and have data centers for others, or is this them planning for the future when they need data centers?
I think it's both. And, to be clear, he stopped short of confirming our report last week that they were developing these businesses, but he spent a lot of time explaining why those businesses might make sense for them. And so there's kind of two parts to this. The first is, like a CoreWeave or a Nebius or something, they might just say, hey, we have excess or extra computing capacity. Let's rent it to someone else who needs it and make a nice premium on that. They're one of the companies that can do that because they have all of this infrastructure in place and they're building a lot more. So that's one potential. The other is sort of doing what they're doing with Muse Spark right now, which is host models on their infrastructure and then sell access to them. It's something like AWS has a product called Bedrock. It's very similar. In that case, Meta would go out and actually have licensing agreements with Anthropic and OpenAI and others to kind of host their models, but then distribute them on their behalf and use their infrastructure that way. Both of those things I floated to Mark Zuckerberg. Both of those, he spent a great deal of time explaining why that would make total sense for the company. But again, not saying we're announcing anything today, just that it's, these are the types of things we are thinking about. And so I think, again, if you're an investor in Meta, you have to be somewhat encouraged by the fact that 3 or 4 months ago, we were sitting here going, hey, what's the business around this huge AI investment? And now today we have several different things that they've announced in the last couple of months where they're trying to make money from their AI investments, which again, are very hefty and very steep.
And they've been making money. They need to make money because they've been spending money, right? So let's talk a little bit about Zuckerberg's big spend. Okay, so he's been aggressive with it. He's trying to keep up with OpenAI or Alphabet or all of them. Is he feeling the pressure? Can you talk about his big spend?
Yeah, they're spending aggressively. It's they had record capex projected for 2026. I'm going off the top of my head here, but I want to say it was in the $140 billion range. He's committed to spending $600 billion on AI infrastructure projects across the U.S. over the next couple of years. They're building a data center that our colleague Riley Griffin went to visit down in Louisiana that is expected to be upwards of $200 billion for that single data center. So he is throwing money around very aggressively to build the infrastructure here. The question was always, well, what do you get from that, right? And up until very recently, the answer was, well, our ads are going to be stronger, or our recommendations and feed are going to be better. And that wasn't super satisfying to a lot of people. Now we're hearing them say things that we're hearing those other AI companies talk about. Hey, we're going to maybe rent capacity. Hey, we're going to charge an API for our models. We're going to charge a consumer subscription for our chatbot. Like, those are the types of products that they've started to tease over the last couple months, which makes, I think, stomaching a $200 billion data center at least a little bit easier if you're a Meta investor.
Does it get investors excited? And I'm just looking at Meta shares down 7% year to date, down 22% since August of 2025. Why are investors not so impressed, Kurt?
Well, because all of this is sort of ideas at this point. It hasn't necessarily shown up on the balance sheet at earnings, right? It's like the story that we wrote last week about them considering these various cloud businesses I talked about, that sent the stock up 9%. I think it was $125 billion of market cap moved in a single day. That's people excited about the prospect of them making money from this. But that's a big difference from, showing up at a quarterly earnings and saying, here's the money that we made.
Well, there are ideas like making glasses, and then there are ideas like the metaverse. Like, which one is this? Or we don't know yet.
I think this is much more glasses than metaverse, because one of the things Mark Zuckerberg and I talked about in our conversation was the AI's ability to do agentic stuff. So, personal assistant, but also multimodal. He talked about that a lot. This ability not just to read text or to analyze a photo or a picture, but to be able to analyze video, to be able to analyze even sound, right? Like, if you are wearing glasses and you have AI built into the glasses that's supposed to be your assistant, you need those glasses to be able to see, where are you? What's happening around you? What are people talking about? And so they're building this AI specifically for those use cases, which to me feels a little bit different than this sort of, the metaverse felt very VR to me. I know it's not exclusively VR, but that sort of was like, you put on the headset, you kind of transport to another world and you're in the metaverse. The AI stuff they're doing feels a little bit more real life, in the sense that, hey, you're going to wear these glasses out and about, and you're going to have an assistant talking in your ear the whole time that can, help you do things or see things that you might not otherwise see. Yeah,
and we've been talking about this AI lab too. So is that part of it? I mean, they're spending billions on AI talent to be part of it. How is that progressing?
And just got about 30 seconds here, Kurt.
Yeah, Mark Zuckerberg says better than he thought. That started a year ago, essentially from scratch. He's very happy with where they're at. All the stuff that we're talking about is pretty much coming out of that lab. So obviously the business framework is somewhere else, but the technology is from that lab. And so he was praising the lab in our conversation for sure.
Yes or no? Was he happy?
He seems happy.
Okay.
Seems happy.
I always like to know how people are, like their mood. Hey, Kurt Wagner, thank you so much. Bloomberg News senior technology reporter joining us from Denver. When we come back, we're going to talk politics, the Democratic infighting that's put the party's midterm targets at risk.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks pushing higher. Chips, the big story today. The SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 4%. NASDAQ 100 up 1.6%. NASDAQ up 1.2%. The S&P is gaining 0.7%, with the Dow up by 0.2%. Not just chip makers, but oil is declining. That's also giving equities a boost. The Bloomberg Mag 7 index up 0.6%. And the VIX right around 16. The 10-year 4.53%, the 2-year 4.16%. Spot gold up 1.1%, 41.24 the ounce, while West Texas Intermediate crude down 2.3%, 71.86 a barrel. Earnings news. PepsiCo said consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. Today we're looking at shares of PepsiCo down 3.8%, rival Coca-Cola down 1.2%. Also reporting earnings, Levi Strauss, the stock trading lower by 1.1%. After the tomorrow morning, by the way, we will be hearing from Delta Airlines ahead of earnings. Delta surging now by 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Lisa and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Ready to talk some politics?
Let's do it.
You are on our planning call. You're like, we got to do some politics here, guys. All right, so let's get to it. I don't know if you've checked the calendar lately, but we are less than 4 months away from the November midterms, which is kind of amazing because I do feel like they're creeping up on us. We do find Democrats facing some infighting between some different factions, which threatens to undermine the party's potential success in those midterm elections.
Yeah, and it's just around the corner, too.
Yeah, exactly. And we've seen the crisis playing out in real time. We've seen that in Maine, where Senate candidate Graham Platner has sought a say in how he is replaced on the ballot following a sexual assault allegation, which he has repeatedly denied. He did comment on this yesterday, and he talked about suspending his campaign and moving to withdraw from the race.
I have faced some very serious allegations, and I just want to make it clear. This is all false. We did it the way that we were told we are supposed to make change, and we won. And now they are not going to let us have it. Not if it's me. And so we're suspending campaign operations.
That was Graham Platner last night on social media. Let's get more on the troubles among the Democrats. Bloomberg News, a senior national political correspondent, Nancy Cook. She is in the Bloomberg News DC bureau. Hey, Nancy, good to have you here with Lisa and myself. Let's start with Graham Platner and how that illustrates some of the infighting going on among Democrats.
Well, what's basically happened is that, Graham Platner was not the pick of sort of the moderate centrist wing or Minority Leader Chuck Schumer. He was really the pick of, a group of consultants who went looking for a new type of candidate and didn't really vet him at all. And then he managed to start campaigning, and he excited a lot of people in Maine with his message about economic populism. And really, Janet Mills, who's the governor there, dropped out before there was even a primary. And so, it speaks to his candidacy, really speaks to just people's desire for, fresh faces, Democrats trying to find new types of candidates to represent them. And now there is, of course, a race on to see who's going to replace him over the next few weeks. But it's really just distracting from, the top Senate race in the country in Maine. We have Susan Collins, who's an incumbent, who's going to be very well funded. And it's just tricky right now because Democrats should really have the wind at their back in the midterms.
So, Nancy, where do Democrats go from here? And also, does Platner have a say in any of this?
Platner isn't going to have a say in it. The Maine Democrats have taken over the process, and they're going to have a convention. We think the last weekend of July, there's going to be 600 delegates. There are several candidates who have already thrown their names out there. I think that we'll see even more to come. And so it's just a matter in the next few weeks of the party in Maine identifying who is going to be the Democratic nominee. And it will be really interesting to see what Maine voters think about this. Who is going to actually get to decide this? Will there be a debate? And what do different, DC groups and donors, how are they trying to play in this?
Well, on the same thing, what lesson do you think Democrats learn from this? Why did they wait so long? We saw kind of the writing on the wall with Platner. Why did they wait so long?
Well, I think they waited so long, and he really enjoyed the support of some key progressives like Senators Elizabeth Warren and Bernie Sanders and Representative Ro Khanna, because the Democratic Party is really desperate to win back working class voters, particularly men. And I think that, he agreed with a lot of progressive policy positions on taxing people or how they view economic policy. And so I think that these more establishment politicians or people here in Washington were willing to overlook some very obvious red flags on his resume and potential problems and a lack of vetting because he espoused the same policy positions they had, and because, as I said, Democrats are so desperate to win back white working class men. And they felt like, here's a guy who's an oyster man, he's a veteran, he can help us reach new types of voters.
So can you talk us through kind of the bigger picture? Like, what's the bigger impact if Democrats lose Maine? What can happen?
Well, the bigger picture is just that they run the risk of not taking control of the Senate in November. Democrats, basically need to flip 4 Senate seats to take back control of the Senate. And Maine was viewed as one of the best possible chances that they had. And so by having this race sort of descend into chaos and infighting and people not really being sure what's going to happen, really with just 4 months to go, it makes the larger prospect of Democrats taking back the Senate much trickier. And, we have another key primary in Michigan coming up in August. That's also going to be a moment when voters will have to decide between the more progressive wing of the party and also a more moderate candidate. So there's just a lot of infighting now within the Democratic Party over the future of the party and what it should look like. And that is clouding out things that they could be doing, like talking about their own agenda or critiquing Trump, who is underwater in the polls, or his handling of the economy.
Oh, gosh, Nancy. Here I keep thinking, all right, so President Trump first came to the White House in 2016, lost in 2020, Joe Biden was back. Here we are now, Trump won again, President Trump won in 2024. I mean, Democrats have had a lot of time to figure out strategies. And I find it interesting that you're saying, like, the clock is running. Maybe they need to be a journalist, or maybe they don't, because sometimes we wait till our final deadline to get it done. But come on, like, who is the head of the party? Who's really helping them say, guys, this is an opportunity for change. Let's listen to America. Let's figure out something different. Like, I don't understand why it just feels like the clock's ticking and they're under pressure and they don't really have a great strategy.
Yeah, that's true. Those are all great points. They don't have a clear leader right now. There's not a clear ideology. They're fighting among themselves. I talked to, one Democratic operative yesterday in D.C. who said, look, primaries are supposed to be the party sort of hashing out their differences. It's useful for people in the party to disagree. But what is happening is that the infighting is really threatening their ability to take back the House and the Senate. And that's just a larger issue for them about how they're going to actually wrestle power back from the Republicans and whether or not they'll be able to.
So the last 30 seconds that we do have here, Nancy, what does the path to creating this united front look like? What does a kumbaya moment look like for the Democrats?
Well, I think that what they have to do when they identify whoever the candidate is in Maine and they pick someone in Michigan, the party just really has to get behind those people. And, the infighting has to stop and the donors have to start giving money and Democratic voters also have to turn out.
And you don't say giving money, that's going to be an issue as well, isn't it?
That's a huge issue. Yeah. Republicans have about 3 times as much money as Democrats heading into the midterm. So, Democrats have a historical advantage. Typically, the party in power loses congressional seats in the midterms, but Republicans have a ton of money in their war chest.
Just going to say 2016, 2020, 2024. Here we are. All right, Nancy Cook, thanks so much. Great story. Bloomberg News senior national political correspondent Nancy Cook. She's out there in our D.C. bureau. Quick story we just want to mention. Goldman Sachs has banned employees from trading on prediction markets except for sports and entertainment bets. So again, we continue to see pushback. This story by our Todd Gillespie. Check it out. It is on the Bloomberg terminal. All right, we are headed for a break. We've got a market where we are seeing certainly the tech sector outperform, the NASDAQ 100 leading on a percentage basis. We'll get another check on the trade for you in just a moment. We'll also take a look at stocks on the move. That's coming your way. I'm Carol Master along with Lisa Mateo, and you are listening and watching Bloomberg Businessweek Daily on this Thursday. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, folks, it is 2:53 on Wall Street. Carol Masser along with Lisa Mateo. We are getting close to the last hour of trading on this Thursday. Just a quick rehash of where we are. Pretty much, Lisa, stocks hovering near their highs of the session. What does it mean? S&P up about 56 points, or up 0.7 of a percentage point, 0.75 of a percentage point, I should say. Dow up 119, if you care, up 0.25%. And you've got a NASDAQ 100 that definitely is leading the way, up 1.6%, up 476 points. So we're definitely seeing risk on trade here again.
Yeah, and you'd never think we've been talking about so much about geopolitical pressure, Iran, everything. And
everything is awesome.
Everything is on fire. But even look at oil. Brent crude down near about 2.5%, and WTI crude down about 2.5% too.
Exactly. So kind of looking through it. But we have been here before. We know that. And that's after 2 days of gains in global oil prices. I'm Carol Massar, along with Lisa Mateo. Let's get to some stocks on the move. With us to do it is Bloomberg News deputy team leader and senior reporter. She rocks always, Jess Minton, and she joins us with Stock Movers. Good to have you here.
Always a pleasure. So good to see all ladies here. Right
Yes.
now. But we love Tim.
We kind of know who rules the earth. I'm just going to say. All right, let's get to the AI trade back on again.
It's always back on, back off, depending on what day it is. But today it's back on. So I want to start with Lumentum. The ticker symbol is LITE for this. So the stock's up about 13% right now, on pace for its best day since June 2nd. But if you look at this stock, so this is an optical networking stock, up over 100% this year, 118%. So a lot of this has to do with what we're seeing with sector catalysts. And some of this is tied to Meta, which I'll get into that in a second with that stock. And I know that y'all were talking with Kurt Wagner earlier from Bloomberg, talking about his interview, obviously, with Mark Zuckerberg. But a lot of this has to do with what's happening with the Meta planning to expand that overall computing power over the next year, and kind of what that means for a lot of these other stocks that are related to this as well, and how they will end up benefiting. Because sometimes when we're talking about some of the top performers, usually it's either a SanDisk and Micron, which they're at the top of the leaderboard as well too today. But Lumentum is part of this when you're thinking about the networking type of stocks that will benefit from a sector catalyst like this. So also KLA, Applied Materials, close behind that, as well as Lam Research. So of course, that's why the tech sector today is the best sector industry group in the S&P 500.
All right, so you led into Meta. So you want to go in that. We were just talking about Mark Zuckerberg not too long ago.
Well, I know y'all were speaking with him. I was with Paul Sweeney this morning on Bloomberg Radio. So we also spoke with Kurt as well as what he was seeing. And my question was, because Meta's stock, if you think back to November of 2022, that was when it first started that tranche of job cuts. Because before, that was when it was transitioning from Facebook to Meta. And people were thinking, is this over? But of course, they went into the AI realm there. That stock's up over 500% in that span. But if you look at year to date, not performing quite as well, but META is the ticker symbol. It's up about 2% today, and on a year to date basis, still down about 7%. But what Kurt was talking about was this transition, and when you keep talking about CapEx spending with a lot of these hyperscalers and what this means, in the recent months, Zuckerberg has been able to communicate and transition to that more towards shareholders as far as what does this mean, as far as what the narrative is, and also just slowly reflecting that in the selling model to developers, and it potentially exploring that cloud business, which I'm sure he may have mentioned to y'all too when Kurt was speaking with you. But he felt like that's kind of helping underpin the stock today, because it had been lower earlier this morning, erased those losses, and now turning higher.
It's like, bye-bye metaverse. We know they haven't talked about that for a long time, but now it's like, oh, those hyperscalers, that data center build, maybe Amazon was onto something and everybody else. But it's fascinating. It's great reporting. Kurt's already put a couple of stories out on the Bloomberg, so I highly recommend. But it is a name that is down on the year, as you said, and we're going to talk with you too a little bit later, but these Mag 7s that have really lagged.
Right, the Lag 7. Which we've seen different periods where that's happened in recent years, but obviously they're the ones that pulled us out of COVID. There's been many different monikers, whether you want to talk about the FANG type names, the Mag 7, Batman, that's when you throw in Broadcom in there. Another one is Mangoes that throws in. We'll get into that with Eric Weiner, though, in the next.
We are going to talk about that. You guys, man, who follow the markets, you have too much time on your hands. Let's talk PepsiCo.
Yes, so of course, I wanted to point this out because if you look at the IMAP function, Staples is the worst performing industry group today, and a lot of that has to do with beverage and food companies because PepsiCo did report today. So if you look at its stock, PEP is the ticker symbol on this. It's actually down about 4% year to date. It's also down close to 5%. Coca-Cola, of course, a competitor, KO ticker, down a little bit more than 1% today on that. But of course, this has to do with the weakness it's seeing in second quarter U.S. businesses, as well as sort of what's happening with that cloud visibility. But a lot of times I like to speak with analysts as far as what it means for price to mix. When you think about shrinkflation coming out of COVID and the spike we saw with inflation, that was something PepsiCo got knocked on in recent years. And so they started trying to expand that, putting more chips in those. I'm sure that's a frustrating thing when you go to the store. But that's something that analysts were talking about.
Well, you think your eyes are deceiving you. You're like, is that box smaller?
Right. It's frustrating as a consumer. And kind of, so I always like to look at these companies for what it means for consumer spending. But they did still see some bright bright spots there, but a lot of it had to do with just higher oil prices that was pressuring why some consumers weren't buying some of their products.
You're making some choices, right? You have to sometimes. Unfortunately, we talk about that in the K-shaped economy. Jess, we'll see you a little bit later on. Bloomberg News Deputy Team Leader and Senior Reporter Jess Metten with Stock Movers. Check out our Stock Movers podcast, 5-minute episodes, big winners and losers. Find it on Apple, Spotify, or anywhere you get your podcasts. All right, folks, that wraps up the first hour of Bloomberg Businessweek Daily. Lots to come in the next hour. We're going to talk about everything from Jersey City taxes to Mag 7 weakness. We're going to do more with Jess Metten. If you're watching on TV, the close is coming your way in just a moment.